Hello, welcome everyone back into the accounting journal entries class. In this video, I will explain you some basic journal entries and how to ascertain the debit and credit of those journal entries and how to pass those journal entries as per the traditional rules as given by Luca Pacioli. So let us take some examples of journal entries here. First, rent paid rupees 5,000 in cash. Second, salary paid rupees 10,000 by check. Third, cash withdrawn for personal use rupees 50,000. Fourth, income tax paid rupees 70,000 by check. 5. Commission received rupees 25,000. 6. Commission paid rupees 10,000. Purchase computer through check rupees 45,000. 8. Purchase goods for cash rupees 50,000. Sold goods for cash rupees 1 lakh. Purchase goods in credit from Dash Brothers rupees 20,000. Sold goods in credit to Felu rupees 30,000. Pass necessary journal entries as per the traditional rules, clear rules and dealer rules. But in this video, I will explain you only the first one, that is the traditional rules. So let us start. First of all, the pro forma of the journal entry will be like this. It will be in this format. In the extreme right left hand corner, we wrote the date and then particulars, then ledger folio, and then the amount of debit and credit. So let's start from the beginning. First journal entry. That is rent paid rupees 5,000 in cash. Suppose that my firm is doing business in a rented accommodation, and I have paid rent in cash rupees 5,000. So here, what will be the two accounts involved in the double entry bookkeeping system? We everyone know that as per the Luca Pacioli rules, there should be two accounts in a single journal entry to maintain accounts in double entry bookkeeping system. Here the two accounts involved are rent paid and cash. So rent paid is an expenses, and we all know as per the traditional rules, that is as per the rules of Luca Bhai, any expenses and losses are nominal account. So rent paid is an expenses and it will go to nominal account, and cash and all other assets are real account. Cash is an asset, so it will go to the real account. And as per the journal entry rules, we all know that in case of nominal account, all expenses and losses are debit, and all incomes and gains are credit. And in case of real account, debit what comes in, credit what goes out. So here, rent paid in cash is an expenses. So as per the nominal account rule, it will be debit, and cash goes out, so it will be the credit. So the journal entry will be rent account debit to cash rupees 5,000. Now the next journal entry. Salary paid rupees 10,000 by check. इसका मतलब our business, our company is paying salary to our employee rupees 10,000 by check. So here salary paid is also an expenses, and since all expenses and losses and all incomes and revenues are nominal account, so it will come under nominal account. And as per the nominal account rules of debit and credit, all expenses and losses are debit. So salary will be debit. तो इसका मतलब क्या हुआ? सैलरी एक एक्सपेंसेस हुआ, एक्सपेंसेस एंड लॉसेस एंड इनकम एंड गेन्स कहाँ पर आएगा? नॉमिनल अकाउंट पर आएगा. एंड एज पर द रूल्स ऑफ डेबिट एंड क्रेडिट और अंडर ट्रेडिशनल अप्रोच, all expenses and losses are debit. So salary is an expenses, it will be a debit. And check means bank, because when I issue check, then my bank account will be reduced. So here check or bank, so here check represents bank, and bank is a representative personal account, as I have explained you earlier in the previous video. And in case of personal account, what will happen? Personal account means debit the receiver, credit the giver. And here in this journal entry, bank is giver. Bank is giving money from our behalf. So the bank will be credit. So the journal entries will be salary account debit to bank account, rupees 10,000. And of course, you should give narration in below the journal entry. And as per the traditional rules, before starting the narration, we use the word being. And after that, just write a short pro forma of the transactions, short description of the transactions. Here, salary is paying by us, so being salary paid in check. And in the previous entry, rent is paying by us, so being rent paid in cash. Don't forget to give the narration after the end of the journal entry, each journal entry. Now next come to the next journal entry. Cash withdrawn for personal use, rupees 50,000. That means cash is withdrawn from business for personal use. Who can withdraw cash from business from personal use? It will be the proprietor. In case of sole proprietor or in partnership firm, the proprietor or owner can withdraw cash from business for personal use. So हमें पता है कि सोल प्रोप्राइटरशिप और पार्टनरशिप फर्म में उस फर्म के ओनर और पार्टनर्स सिर्फ अपने बिजनेस से कैश निकल सकता है अपने पर्सनल यूज़ के लिए. तो जब प्रोप्राइटर्स और ओनर्स इंट्रोड्यूस कैश और सम अदर एसेट्स इन बिजनेस, जब कुछ कैश देता है बिजनेस में और इन्वेस्ट करता है या फिर कुछ एसेट्स इन्वेस्ट करते हैं ओनर्स और या फिर पार्टनर्स लोग, तब हम उसे क्या कहते हैं? तब हम उसे कैपिटल कहते हैं. और जब वो लोग अपने पर्सनल यूज़ के लिए बिजनेस से कैश विथड्रॉ कर लेते हैं, तब हम उसे ड्राइंग्स कहते हैं. सो हियर द कैश विथड्रॉन विल बी ट्रीटेड एज ड्राइंग्स अकाउंट. एंड वी ऑल नो दैट लाइक कैपिटल, ड्राइंग्स अकाउंट also represents the personal accounts. So, as per the journal entry rules of Luca Pacioli, in case of personal accounts, debit the receiver and credit the giver. So, here here the owner is withdrawing cash for personal use. So, the owner is receiver. So, it will be the debit. So, drawings will be debit. And in case of cash, we all know that cash is real account, and here the cash is going out from business, so it will be the credit. So the journal entry will be drawings account debit to cash. So let's come to the next journal entry. Income tax paid rupees 70,000 in check. मतलब क्या होता है? बिजनेस को इनकम टैक्स देना पड़ता है या फिर किसी पर्सन को इनकम टैक्स देना पड़ता है प्रोवाइडर को, तो वो ही इज पेइंग इंटरेस्ट, और किसी इंसान को भी देना हो सकता है. तो इन केस ऑफ इनकम टैक्स वी आर पेइंग रुपीज 70,000 इनकम टैक्स इन चेक. सो हियर द इनकम टैक्स इज एन एक्सपेंस and all expenses and losses are nominal account, and in case of nominal account all expenses and losses are debit. In case of nominal account all expenses and losses are debit. So here it will be the debit. And here the bank is, as we all know that bank will be the personal account, and in this case the bank is giving money to the income tax department on our behalf. So the bank is the giver, and so it will be the credit. And the journal entry will be income tax expenses account debit to bank. Very simple. So let's come to the next journal entry. Commission received rupees 25,000. Here the person is receiving, here you are receiving commission rupees 25,000. So here, but the commission may be received in cash. It is in this journal entry I am assuming that the commission is receiving in cash. So here cash, as we all know, that real account, and here the cash is coming in, and when something comes in real account, then what will happen? Then it will be the debit. What comes in? Debit. So here the cash is coming in, and so it is debit. And commission received is an income, and we all know that all income and gains belongs to nominal account, and in case of nominal account all incomes and gains are credit. So it will be the credit, and the journal entry will be cash account debit to commission received rupees 25,000. Now in the next journal entry, commission paid rupees 10,000. Here we are assuming that once again commission is paying by cash. So here commission paid is an expenses, and all expenses and losses belongs to nominal account, and as per the nominal account rules all expenses and losses are debit. So commission paid will be debit, and cash is going out, and we all know that cash is real account, and here the cash is going out from our pocket, so it will be the credit. So the journal entry will be commission paid account debit to cash. Now the next, purchase computer through check rupees 45,000. Here I am you are purchasing computer through check rupees 45,000. So it involves bank account transactions. So here computer is purchased, and we all know that computer belongs to the asset, because you uses computer as an asset in your business to ascertain your income and gains, and to make all journal entries and to keep records of and track of all your transactions. So it is an asset, and all assets will come under real account, and in real account rules debit what comes in is what comes in will be debit. So here the computer is purchased and computer is coming in our business, so it will be debit. And since bank is a personal account and here the bank is giver, so it will be the credit. So the journal entry will be computer asset account debit to bank. The narration will be being computer purchase in check. Once again I want to remember you all that don't forget to give narration after the journal entry, and narration is a short precise writing of the nature of transactions. So now we are going to see the next journal entry. Purchase goods for cash rupees 50,000. We all know that purchase is an expenses, and all expenses will come under the nominal account, and as per the nominal account rule all expenses and losses are debit. So purchase will be debit, and cash is an asset and it comes to real account, and here the cash is going out, and as per the real account rules what goes out is credit. So cash will be credit. So here is the journal entry, purchase account debit to cash. Now came to the next journal entry, sold goods for cash rupees 1 lakh. So here we are selling goods in cash. So here what will happen in case cash is in real account, and here during time of sale cash is coming in our business. We are selling goods to some customers and he is paying us in cash, so cash is coming in, and so what comes in as per the real account rules, what comes in will be the debit. So here cash will be debit, and sales account is a type of revenue, and so all revenue and incomes are coming under nominal account, and as per the rules of nominal account all incomes and gains are credit. So sales will be credit, and the journal entry will be cash account debit to sales. The narration will be being goods sold in cash. Now came to the next journal entry, purchase goods in credit from Das Brothers rupees 20,000. Here we are purchasing goods in credit from Das Brothers. That means we are not paying the money to Das Brothers for purchasing the goods from him. We promise to pay him in some future days, maybe after 15 days or after 20 days. So here it will be treated as credit sale, and here the Das Brothers will be our creditors. And so here the two accounts involved. One is previously purchase account and the other is Das Brothers account. Here purchase account means, as I explained you earlier, is an expenses, and all expenses will come in nominal account, and as per the nominal account rules all expenses and losses are debit, so it will be the debit. And Das brothers will be our creditors. Creditors means personal accounts, and as per the rules of debit and credit under traditional approach, in case of personal account, debit the receiver and credit the giver. Here Das brothers is giver, he is giving us goods in credit, so he will be so Das brothers will be credit. So Das brothers will be credit, and journal entry will be purchase of account debit to Das brothers. Narration will be being goods purchased in cash from Das brothers. And now came to the final journal entry. Sold goods in credit to Felu rupees 30,000. Here we are selling goods in credit to Felu. That means we are selling goods to Felu, but Felu is not paying us right now. Maybe he will pay us after 15 days or 20 days. So he will be treated as our debtors. So here two accounts involved. One is obviously sales and the other is creditors or Felu account. And the other is debtors, that is the Felu account. So here, as per the double entry bookkeeping system, Felu is our debtors, and debtors is a personal account, and as per the rules of debit and credit, in the personal account, the receiver will be treated as debit and the giver will be treated as credit. Here Felu, that means our debtors, is receiving goods from us. So Felu account will be the debit. That means the debtors account will be the debit. And the sales is a revenue, and all revenue will come under nominal account, and as per the nominal account rules, all incomes and revenues are treated as credit. So the journal entry will be Felu account debit to sales rupees 30,000. The narration will be being goods sold in credit to Felu. Hope you all of you understand clearly the rules of debit and credit under the traditional old approach as proposed by Luca Pacioli, the mathematician of the medieval age of Italy. And in our next video, we are going to discuss the modern approach of both the clear rules and the dealer rules. So let's stay tuned.